Argentina and whatnot, but interesting chart. And I'll show you here. Let's get the volume here off separated here. But I show this chart not to say go trade this stock, right? In fact, options very difficult to trade on it, yeah, I mean it's just you can see the volumes; they're just not all that great. This isn't, this is if you want to invest, great, but it's a beautiful chart. And it's what I expect that we will start to see form out there in a lot of other names as the next several weeks unfold. But it comes in here, right? And it puts in this high volume bottom right here. Did the same thing back here in May. This high volume bottom. Then it rallies. And you'll notice it never sets a higher low. It just kind of keeps going, doesn't set a higher low. So bottom, bye-bye. Doesn't hold. Comes and does the same thing. Tries to set a higher low. Starts to go. All right. Even some good volume on it. That's what you want to see. You got the bottoming volume. You got the higher low. Well, then what happens? Breaks down below the 7. That's your first warning sign that something's amiss once it breaks the 20. Okay, you know what? This higher low may not hold. Breaks. All right, you end up getting whipsawed out. Okay, no problem. Goes to a new low. It gives another big high volume. Here it goes. Pulls on back. What's it doing? It's actually giving a nice little basing off of a higher low. Here was a short-term base. Here we're talking about a much longer 1-month base. Bollinger Bands are tight. It's been good upside volume. And today, piercing that upper band. You have stochastics pushing above 50. You have the MACD in a bullish crossover position. Whatever indicator you want to throw on here, it starts to look pretty good. Starts to show nice improvement. This is one of those pictures, right? If you just kind of take a snapshot of this and you say, you know what, I'm only going to trade this picture, you'll get a bunch of them during the course of a year. But it's not going to give you something each and every day. But it's a really nice picture for the bulls. It is something that has a high frequency of seeing really nice follow-through to the upside. And, while, PAM isn't all that tradable, I did want to show the picture here with it. There aren't any trend rider signals out there here today that are coming into the market. We saw yesterday's trend riders with Macy's and with Chipotle Mexican Grill, and I mentioned with both I need to see them pull back a bit for me to get in. Macy's is pulling back a bit. Nice to see. It's still a little bit of ways from the 7. So I've been watching the hourly chart here a little bit today, and it's come down to the 20. I'm going to kind of see if we can't get a move down to the lower Bollinger Band on the hourly. That's a full retracement of the recent surge, and I'll look to be a buyer. I'll look to be a buyer then. The options may get a little bit tricky since they report here in about 8 days, I believe, 8-9 days. They report earnings, so it may not be something I can really trade even if I get the picture or the perfect picture. But Chipotle has already had earnings. They're done and dusted. So if I get that perfect picture, then I can go ahead and take advantage of that here. So on a trend rider, those are we're not seeing a whole lot, but I did want to show that trend rider picture here with Pam just because of how how pretty it was. It's just one of those that very nice indicator chart type of setup here. Now, on the Katie signals, we have 119 stocks in the S&P 500. That is 22%. It's a monster number. You've heard me here say monster numbers when we've had 50 or 60. we're at 119 here today of stocks where the 3-day moving average is crossing up above the 7-day moving average. If we just go to Katie's watch list, which is a lot smaller than the S&P 500, we can narrow it down a little bit, but we still have quite a few coming in. And let me see if I can pull that list over here of the ones on Katie's watch list that have 3-7 crossovers. I can't pull it over, but there are 5 of them. One is Apple. Reports earnings here this week, but has a 3-7 crossover going on with it, and could possibly be a Katie signal here today ahead of earnings. Another one's Facebook, which had earnings last night. This will not be a Katie signal. Consolidation risk is too high on it. FedEx, 3-7 crossover. This could be a Katie signal by the end of the day. We'll see what the consolidation risk element here is, but this one has a decent chance of being one. JP Morgan has the 3-7 crossover. This has just made a monster bounce. With Bank of America, JP Morgan, they have just made some pretty monster bounces here. But overall with these banks, it is showing, or the Katie signals are showing, that the consolidation risk is still pretty high. So for me, it's one where I've gotten all the evidence that I need to say, look, buy banks on a higher low. I've gotten everything I want to see. Well, they pull back, give a higher low. They're going to be a great setup, and one worth getting very, very aggressive with. And last but not least, Entes has a 3-7 crossover going on here with it. Again, we'll see what it shakes out by the end of the day here, but we have that with Entes. But the entire list of number of stocks here in the S&P 500 with 3-7 crossovers is just massive. And I think I can bring this one over. So bear with me for just a second. I'll just show it to you. I'm just going to run a quick scan here from stock charts. Here we go. Here we go. So we'll sort these by volume, highest volume, but you can see Bank of America, Facebook, Apple, eBay, Cisco, Regions, Kinder Morgan, JP Morgan, MGM. I mean, just the number of 3-7 crossovers that are out there. It's one of the biggest numbers we've ever seen. And it is one that I would expect to see a lot of these with how big the market rally has been since Monday afternoon, right? And I expect that basically the fact that it's been able to do this is basically saying, look, it's, we're probably not going straight up from here, but as there are pullbacks, those pullbacks are going to be strongly buyable going forward. So there's the complete list here. You can see it's across sectors, some of it market driven, with the boost in the market, but much of this is also, very individual stock driven. Now, I need to emphasize, these are not all things that even would filter through the Katie algorithm. Something like a Jacobs Engineering, the consolidation risk would be very, very high. And so it's one where, we're still not seeing a ton set up saying, hey, here we go, it's ready to go, ready for its monster trend now. We're still kind of in that chop phase. But we are seeing some substantial improvements across the board out there in the market. And some things that, as time goes by, some things that need to be remembered. And some things that need to be noted and say, okay, yes, this is the type of move. Yes, bull's in charge here. Pull back on light volumes. Those are very buyable, because as investors step back in, these are the things that they're going to be purchasing. Okay. All right. So that's MarketVIbe signals. Now for the challenge, I have Adobe. And what can I say about Adobe? Gotta love Adobe. Here, there, everywhere, up 4% here today. You know, it's what almost $18 off its low yesterday. $16 off its low yesterday. It just has it has just been pretty volatile with the market, and you know, it's one where I'm glad I still have some time on my option, and it's one where the price action that we have seen overall only makes me more bullish, not less bullish. It's one where it would sure be nice to wake up tomorrow and to see it open higher and make that push here up to the upper Bollinger Band here this, you know, for the rest of this week. And as we get into the end of this month and the start of a new month here tomorrow, and then the jobs report on Friday, I do think there's catalyst for the market to, you know, have some updates, probably not to the same degree, but where Adobe can climb to 255 tomorrow, 262, 264 on Friday. And that'd be really nice to see. And you know, I kind of expect to see that. But again, you know, we're still dealing with a lot of the market volatility and a lot of the chop. And, you know, if the market's down 40 points tomorrow morning, Adobe's going to be down here with it. So not a whole lot of getting around that here overall. I do suspect that, you know, it'll have a little bit of reaction to Apple's earnings here as well. Not that Apple's earnings matter for Adobe, but they do matter for tech and the confidence in tech. And if the confidence in tech is high, these stocks will get bought up. If it goes down, stocks will get sold. I've looked and said, do I want to add to other things? Do I want to go and get into, is it time to get aggressive? By aggressive, I don't mean going and buying a monthly option and riding it for 2 to 3 weeks. I have that play with Adobe. I don't need another one of those. By aggressive, I'm talking about something I can go in and buy a 9, 10, 14-day option and say, all right, I expect this to move now. I expect it to move in the next 2 days. It has a perfect hourly setup and daily chart here as well. I mentioned in my notes this morning about Bank of America, and this is the one I had my eye on. It gapped on up. I looked at the options, and I just said, you know, I don't want to chase into them here just yet. It was at about 26.20 before, you know, the options really even settled out. It's gone on higher about 60 cents here, kind of chased a little bit away from me, but I want to be very aggressive, and if I'm going to be very aggressive, I have to be very exacting. And, you know, while, yes, I see a lot of things kind of starting on that path, starting to give that element, I don't see a lot that I can go, all right, now, I feel really confident I can get it right here, and I've got a great price right here, and go. I see a lot of stuff from an investment standpoint that's that way. Not a lot of stuff from a short-term trade standpoint. And so for me, a lot of this, we see this move here this week. Great. What's that going to tell me? Great. When we have that pullback, when we come back in here, these are going to be buyable, especially on the next move above the 7-hour. And you could argue, well, Bank of America, yes, it had the higher low and the move above the 7-hour. And I looked at it into the close yesterday, and I was just a little too cautious, right? But I expect that we'll start to see a lot more of these types of setups coming in out there, and with the watch list for the challenge really starting to grow now that a lot of the earnings have taken place. And I'll share that with you here before the end of the week. But you know, with earnings having taken place, you know, there should be a lot more opportunities in some areas to you know, to get very aggressive with, because I don't know about you, I'm ready to get the show on the road and let's go. We've weathered through the sell-off and, you know, some of the chop and the bounce and the dice and on the high option prices and the earnings elements. We've weathered through some of that. You know, I wish we would have weathered better through it. I wish I would have weathered better through it. But you know, we're still plenty in the game, and I think we have kind of a unique opportunity in terms of taking advantage going forward, and you know, really want to take advantage of that. Thanks for hopping on. Thanks for being with us. Have yourselves a great day, and we'll talk to you tomorrow. Take care.